Today seemed like a pretty easy day. The market didn't go anywhere, very small range, but under the surface, there was a significant rotation. Small cap stocks continue to move higher. They got a very good technical signal that I talk about in today's video. But Treasury yields also went higher, and that pretty much put a lot of pressure on a lot of the areas that did so well yesterday in the markets. In the technology sector, we saw a split between mega cap names and other software issues that we went. So we also saw that too in another important sector that's impacting and kind of telling us a different story about what may be going on with the consumer that the broader market might not be telling us. So I break all of that down in tonight's Market Outlook preview. Let's go ahead and get started. Today is Thursday, December the 4th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment down there on anything that stood out to you today, and share the video with anybody else you think would be interested in it. All right, also, if you click this link right here, that will take you to our basic page. This is where you can subscribe to our site for free. You can also see at the top of our screen, it's got the same link there. But you can subscribe to our site for free. You get all the Market Outlook blog posts. So every single one of our Market Outlook blog posts that we have on our site, they're all free. This is what it looks like. You have, a lot of information there about what happened today and why. So you get access to all of these every day for free. On Fridays, you get access to the full Market Outlook video. That's only available for our foundation tiers throughout the rest of the week. Foundation tier members, you can see here at the top of your blog post. But that's available for you on Fridays for free, as well as we do monthly webinars and other blog posts that are available for our basic subscribers. So again, you can just click right here to join free, or just scroll down and fill out that form, hit sign up. And that gets you. If you click this link, that will take you directly to today's Market Outlook blog post. So you can get right there. If you're not logged in, but you're already subscribed, just click the login here button. This is what it will look like when you go to that link. If you if you want to see the full blog post, again, for free tonight, like right now, just click this join free button, go to the basic page, fill out that form, sign up, and there you go. And like I said, on Friday, instead of seeing the preview video that you're watching right now at the top of the blog post, you'll actually see the full 30-minute version of the video that we do every day, including the trade idea that we do at the end of every Market Outlook as well. All right, now let's take a look at what's going on today. So it was kind of an interesting day. It's a little bit of a rotation move. The S&P was flat, as you can see right here, but the Russell 2000 was not. In fact, we actually got an overbought cluster on the Russell 2000, coming off of an oversold cluster. In fact, like this is kind of like a Brett thrust, right? We got an oversold cluster on the low, on the lowest day that we had. We immediately rebounded off of that. And then on the first day the intermediate line crossed, the intermediate line keeps going up. The first day it crosses the 80th percentile, we get an overbought cluster, which again is a very good sign. It sounds bad because you say overbought, but to get one so early in the intermediate run is very good because it solidifies. It's like a Brett thrust. It solidifies the run. Now, again, it could also be the highest point. So we'll see. We got a new 52-week closing high today. We didn't quite get above 25.41, about 10 points away from closing above the all-time high, intraday high. But we're 3.5% above the moving average, dark green shading and a green line. The Russell 2000 is looking pretty good. Now, one area that I've shown you this chart before, if it breaks that 200-day, it's flirting with it right now. If it breaks that for good and the 8 and 17 cross below the 50 and eventually cross below the 200 themselves, then that's generally not a good sign for the markets. If the Qs are underperforming to that degree against the small cap index, it's okay in short spurts to get us to the 200-day. We don't want it to be breaking the 200-day. One of the big reasons why we had a little bit of pressure on risk appetite today was yields. So after yesterday's employment data that was bad and brought yields down, and the market loved it, especially these interest rate sensitive areas, the opposite occurred today. So we had better than expected jobless claims. Yields rallied more than they dropped yesterday, 5%, and it put a lot of pressure on areas like home builders, right? Home builders, you can see, just can't get going to the upside. They've been in this bearish move longer than the market was, and we got dark green shading in a green line, so it looks like we're reversing, but it can't quite stick. And it looks like we might be reversing down. That might be kind of a telltale sign of where the stock market thinks yields are going. That the stock market might think after this rate cut we finish. Remember the year before, last year, 2024, after we stopped with the rate cuts, yields just kept going up. And that might be a similar scenario to what we might be getting here. In the earnings news, we had a stock in the grocery industry, Dollar General, really taking off to the upside. So you think, Walmart's been doing very well here lately. But when you look at others like Costco, not so good. Kroger, not so good. XLP, which contains a lot of these stocks, is still in correction mode and flirting with failing on this correction and potentially going down into bear market mode, right? Which is kind of the last thing we want to see. But it might be a little telling about the state of the U.S. consumer if we continue to falter here. I've shown you before, like the whole moving average. If you look at XLP and again, we're below. We flipped the parabolic SAR up. We're below that. You can see also we had flipped the parabolic SAR down here with the rally. So we are below this is correction mode when you're below the 200 week, and then when you look at the 200 month, we're actually below the 200 month. So we are now susceptible to a bear market move in XLP. And again, this would be a relative indicator of consumer, right? If consumers at the non-discretionary end. Obviously, consumer XLY is heavily dominated by Amazon and Tesla, and it's still doing okay as mega cap names, but the non-discretionary areas not doing so well at all. Then other news in a sector, kind of divergence within a sector occurred with Microsoft. Meta. Microsoft was earlier. Meta jumping up today because it's no longer involved in the metaverse, and look at the jump it made. That's got a very good chance at failing. In fact, I would anticipate this to fail. It failed over here right before the earnings. It made a rally, and then with the earnings it dropped. I would highly anticipate, since it basically opened at the 15-200 day moving average and then dropped throughout the day, I would think there's a very good chance we fill in that gap. Now, again, there's some heavy support down here, so I don't think it's going to free fall to the downside. But I also think that it would take some more momentum to get into this gap, post-earning gap to the upside, above these moving averages, and really get going, including getting above today's open. So on the other hand, which is the other thing kind of impacting, is an 11% drop on Snowflake. Big drop there below the 50-day moving average. Some room to falter. It's flirting with the low point we had pre-expiration. So you can see why XLK is struggling to get going, because even within the sector, you have competing forces kind of dragging and pulling. The other good story about today was the breadth remained positive, right? So it didn't jump like we wanted it to, but at least it didn't drop. So it remains positive there. The McClellan oscillator, still the summation index, you can see, jumped above 0 yesterday. So that's a very good sign. The number of stocks above the 50-day moving average has held up, still above 250, closer to 280. The number of new highs that we have is still above 100. The advanced decline's a little bit of a concern because it's negative there, but it's not strongly negative. So we'll take that kind of negative, right, where it's only just barely negative, as you can see. That's the kind of negative we'll take. You notice, in fact, when it has gotten negative, you notice it's gotten progressively less negative. So that's a very good sign for the market. So it was kind of a reversal from yesterday, where rates fell and everything rallied, including semiconductors. Today, technology's mixed. Some other areas of the markets are mixed, but the interest rate sensitive areas got hit hard. And again, it's kind of holding back the breakout and keeping us in failure zone. So that's what I kind of dive a lot more into in tonight's market outlook, the full version of tonight's market outlook. But that does it tonight for the preview version. If you want access to the full version of the market outlook video every single day, click this link right up here. That takes you to our foundation page, in particular our yearly foundation page, which is our best value. For a full year, you can pay $299 a month, which works out to being 2 months for free compared to our monthly version. And like I said, you get access to the full year's worth of Market Outlook videos, including the trades at the end of each video. You also get access to the Market Outlook live video where we put the trades on before the market closes during a live stream class on our website. And then we also track the results of all those trades. During the Market Outlook Live, we manage the trades. We decide when do we get out of them, when should we get into them, when should we get out of them. And then finally, you get the trade tracker where we track the results of all the trades throughout the year. We get in and get out, like I said, and we track all the results. So all of that for just $2.99 a year. If you have a PayPal account and apply for their credit, you can get 6 months no interest when you subscribe to that tier on our website. So a great way to get introduced to what we do here at Market Scholars. And considering, like I said before, that our trades, are up close to $10,000 on the year, $299 is well worth the cost, according to a lot of people who actually use that money to purchase their premium services that we have on our website. Again, thank you very much for watching. Follow me on Twitter at DavidSettle42 for more content between the videos. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.